Hi there. Thanks for tuning in. Today, we're going to be doing an analysis and valuation of Walmart de México, also known as Walmex. So, join me to see this separately traded company that operates in Mexico and Central America, but it's also partially owned by Walmart. You can invest in a different piece of the pie instead of investing in Walmart's operations in the US and Canada. Let's see if this is worth our while. The reason I started analyzing this stock is because I was reading The Economist, which doesn't sponsor this video, but if you want, call me. I'll definitely take one. And they had this article that said America First may be a boon for Walmart's Mexican business. The article argues that a more business friendly environment helps Walmex. The current political environment and the current president of Mexico seems to be a little more business friendly, especially in light of tariffs. She may see that tariffs are going to complicate the economic situation, so she'll be willing to work with businesses and give them more allowances. Plus, most of what Walmex sells is made locally, even more so than Walmart US. It says about a quarter of Walmart's goods are made internationally or imported. When Walmex imports about 17% of that only. Plus, USMCA and tariffs help, and tariffs being a lot softer on Mexico than on other countries help plenty with the fact that they could export things or import things from the US at less of a cost, right? So all of this combined means that Walmex is suffering a lot less than other companies, and the Mexican economy in general may be good for this particular business. So that made me look further into what Walmex represents at this moment. And recently, even though the share price hasn't been doing all that great, the results have been quite decent, actually. The revenues are growing, the operating income growth is taking place, there's a good EBITDA margin, the market is being outperformed by Walmex, basically. So that's pretty good. And they're expanding, they're opening a lot of new stores, 20 new stores in Mexico just in one quarter, and five in Central America. So that's very important. And they have all sorts of new businesses like advertising, connectivity with a Bait app, and then different benefits, right? If you haven't been to Latin America, there's a lot of different things that you can do there if I want, for example, different payment methods or different insurance things. I can go to a store to get that. I don't have to just do it all online. A lot of businesses done like that. So here, one metric that we'd love to see with anything that has storefronts is the same store sales growth. So you want to see that not only are you growing from opening new stores, right? But also that the stores that you already have are actually growing. So they're saying these stores that they already have grew in sales 4.4% in Mexico, 4.0% in Central America, totaling a revenue growth of 8.3%. And then their total store sales growth being larger than that. This is adding on the new stores that they opened, which capture other markets that they may not have been satisfying yet or filling. Now, when I look at the financials and when I look at a whole year worth of financials, I see, first of all, monster revenue growth. They didn't even shrink, not even in 2020. Of course, being an essential business, you still need your groceries and stuff, and you'll often get them from Walmart because it's the most affordable place nearby. So you see the revenue growth very consistent, never dipped below 4%. That is amazing. The gross margin, again, very consistent, right? Never really dipped below that 21.5% at its lowest, I believe. The operating margin, super consistent once again. The return on invested capital, which you should really care about to see how efficiently their investments are being translated to further dollars, also very consistent. So, very few bad years because of the defensive nature of the stock and the essential nature of it. Also, the margins are solid, maybe slightly improving. We love to see it. So, this already piques my attention. So I'm going to do a valuation of Walmex. I'm going to do it in Mexican pesos. And what I'm doing here is simply grabbing their revenues, then I'm going to grow them by 4% per year in perpetuity, right? And then I am going to do a required rate of return of 11%. And then I'm going to divide that by the total number of shares out that they have. And I get a fair value of 59 pesos and 1 cent per share. Now, if we subtract their net debt, which is 50 billion pesos, uh, we get a fair value of 56 pesos and 12 cents. So that's what my calculation says Walmex should be worth per share, right? This is with a conservative growth rate of 4%, which is way less than they've grown. They'll probably outperform this at least for a few years, but I'm saying this is it for perpetuity, right? As they expand into new markets. if we look at their price, 56.20 versus this 56.12. I mean, right on, right? It's between these two numbers. If you don't care about debt at all, if you think, oh, their debt is in favorable terms, or they turn over that very quickly, I think then it's maybe slightly undervalued. And if not, it's about fair value. And I think this makes sense. And in general, you see that it's at one of the lowest prices it's been in a while. It hit around this 50 level at some point in intraday trading, but in general, it's underperformed. One of the reasons is because its CEO quit abruptly. But also, yeah, they languished in 2024 with bad performance and because of uncertainty. So let's talk in general about whether this does actually represent value. The thing is, perhaps, Walmex is a high growth opportunity that is more defensive than many other Latin American stocks. At the end of the day, Walmart, whether fair or not, does outcompete many grocery stores in terms of being able to have bigger supply chains to provide cheaper goods, for example. When it opens, it has generally a lot of pull to it, right? Both in employment and just being able to provide people with everything they need. The valuation seems to have reached a decent level, even when I'm forecasting conservative growth. So if you think it's going to outperform that, that's a pretty decent deal. But political and trade risks won't fade, and the tariff situation may change. Since we've been living in 2025, we may wake up tomorrow and find that tariffs are changing and those rates are much higher or much lower or whatever. And even if it doesn't affect Walmex that much directly, that may affect the general market and depress it, which could represent a better buying opportunity. But if you bought too soon, you may be sad about it. Regardless, Walmex may suffer less than other stocks, even in the worst case scenario, and you're rewarded with dividends buybacks in the meantime while you wait. Another thing that's very important to note about Walmex, another advantage that they have, is that Walmart already has a tech stack. So when we talk about e-commerce, for example, they do operate with e-commerce in Latin America, which is a growing sector. It's not as saturated as the US where everyone orders everything online. So the cool thing about Walmex is that they don't have to develop these things from scratch like many other local grocery stores could. They if they tried Walmart Plus in the US and it was successful and they want to take it to Mexico, you already have the functionality built. You just have to integrate it with the delivery mechanisms in those countries. But you don't have to build Walmart Plus from scratch. That's the same with many other technologies. So that is important, having a tech stack that already exists, which lowers your overall overhead. It keeps your margins high. The other thing that I think is important to realize is that this is defensive, so we can say it's lower risk, but because of the current valuation, is the reward worth it? Because right now it's fairly valued in a conservative scenario, your required rate of return will be just that, about 11%, according to my model. Are you happy with that? Are you happy with taking less risk, or maybe in a scenario where the market does get depressed, Wellmix goes down 5% when the rest of the market goes down 20%? Is the reward worth it to you, right? Having very little risk compared to many other stocks, but potentially lower reward that comes with that. This means it could be a good defensive stock to add to your portfolio if you want to look for diversification, be it regional, right? Adding something outside of the US or Europe, or just in terms of risk, right? You have a lot of high risk stocks and you want to add something more defensive. I think it's just a good case study in seeing that you should look outside. You should look at things that you haven't looked at, and maybe you should diversify both in terms of risk and region. I hope you learned something. And if you like this analysis, please comment down below. Let me know what you liked about it, and let me know which stocks you want me to look at. Also, please remember to like and subscribe. It helps me out a ton. Thank you so much, and have a great rest of your day.